Kevin O'Leary is widely known thanks to his appearance on the reality pitch show Shark Tank, but he is also well known as an asset manager. Mr. Wonderful typically invests in stocks with large and profitable businesses and prefers to have a large portfolio of stocks with all of them paying dividends. Throughout O'Share's investments, a division of his investment fund, O'Leary's Fund Management LP, where he serves as chairman, the reality TV star has invested in around 100 positions with net assets adding up to nearly $615 million. With so many different investments, today's video will only focus on the top 10 positions of Kevin O'Leary's portfolio, which make up only 39.11% of his total assets. The 10th largest position in O'Leary's portfolio is Honeywell International Inc., which makes up just over 2.5%. Honeywell International is a diversified industrial company that has 4 divisions: Aerospace, Honeywell Building Technologies, Performance Materials and Technologies, and Safety and Productivity Solutions. The company generates $32 billion in annual revenues, and more than 40% of the company's sales come from international markets. In 2020, revenue declined, and as a result, adjusted earnings per share were lowered by 25% to $1.56. Much of the decline was due to COVID-19 pandemic, as industrial companies tend to perform well when the economy is strong but struggle in weak economic climates. However, in the fourth quarter of 2020, each segment performed better than in the previous quarter already, and experts still expect long-term growth for Honeywell due to the company's leading position in the industrial sector. Nearly 3% of Kevin O'Leary's portfolio is made up by American multinational technology conglomerate Cisco Systems Incorporated, which is headquartered in San Jose, California, in the center of Silicon Valley. The technology giant develops, manufactures, and sells networking hardware, software, telecommunications equipment, and other high technology services and products. Through its numerous acquired subsidiaries such as OpenDNS, WebEx, Jabber, and Jasper, Cisco specializes in specific tech markets such as the Internet of Things, domain security, and energy management. Cisco Systems was founded in December of 1984 by Leonard Bozak and Sandy Lena, 2 Stanford University computer scientists who had been instrumental in connecting computers at Stanford. They came up with the concept of a local area network being used to connect geographically disparate computers over a multi-protocol router system. When the company went public in 1990, it already had a market cap of $224 million, but by the end of the dot-com bubble back in 2000, it increased to $500 billion. As of November 2020, Cisco has a market cap of around $173 billion. Since 2011, the company has been paying a dividend, making Cisco one of the younger dividend-paying stocks in O'Leary's top 10 positions. However, since 2011, its dividend has increased 12-fold, now yielding 3.2%. Apple is the largest company in the world by market capitalization, but considering that O'Leary normally prefers companies that return capital to shareholders, it might come as a surprise that the company makes up just 3% of his portfolio. Apple is the youngest dividend-paying stock in the top 10 of his portfolio, having only distributed income to shareholders since 2012. However, the multinational technology company headquartered in Cupertino, California, is considered one of the big 5 companies in the US information technology industry. Apple was founded by Steve Jobs, Steve Wozniak, and Ronald Wayne in April of 1976 to develop and sell Wozniak's Apple I personal computer, though Wayne sold his share back within 12 days. It was incorporated as Apple Computer Inc. in January of 1977, and sales of its computers, including the Apple I and Apple II, quickly grew. For the 2020 fiscal year, Apple's worldwide annual revenue totaled at $274.5 billion, making Apple the world's largest technological company by revenue and one of the world's most valuable companies. In August of 2018, Apple became the first publicly traded US company to be valued over $1 trillion, and just 2 years later, in August 2020, it became the first $2 trillion US company. As of January 2020, more than 1.5 billion Apple products are actively in use worldwide, and the company also has a high level of brand loyalty and is ranked as the world's most valuable brand, making it a pretty stable investment in the long run. Pfizer is currently making headlines thanks to their cooperation with BioNTech in creating a COVID-19 vaccine. The American multinational corporation is one of the world's largest pharmaceutical companies, and was ranked 64th on the 2020 Fortune 500 list of the largest US corporations by total revenue, at $47.644 billion as of December 31, 2020. The company focuses on prescription drugs and vaccines and produces medicines and vaccines for a wide range of medical disciplines, including immunology, oncology, cardiology, endocrinology, and neurology. Pfizer was founded in New York City in 1849 by cousins Charles Pfizer and Charles F. Earhart, who launched the chemicals business Charles Pfizer & Company, where they produced an antiparasitic called santonin. This was an instant success, but it was the production of citric acid that led to the Pfizer's growth in the 1880s. Today, the company is organised into 9 principal operating divisions: primary care, specialty care, oncology, emerging markets, established products, consumer healthcare, nutrition, animal health, and capsule gel. Pfizer is a mega cap stock with a market cap of $215 billion and with a dividend yield of 4%. It is not surprising that it makes up 3.4% of Kevin O'Leary's portfolio. Verizon Communications is a multinational communication conglomerate based in Midtown Manhattan, New York City. Verizon's subsidiary Verizon Wireless is the second largest wireless communication service provider in the United States, with 120.32 million mobile customers for the third quarter of 2020. Wireless contributes to about 3/4 of all the company's revenues, while broadband and cable services account for about 1/4 of all sales. The company's network covers roughly 300 million people and 98% of the US, so this company is an absolute giant. One of Verizon's key competitive advantages is that many consider the company to be the best wireless carrier in the US, and its reliable service allows Verizon to not only maintain its customer base but also offer an opportunity to move the customers to higher price plans. With the company currently preparing to roll out a 5G service, they will gain another competitive advantage over weaker carriers, so it looks like Verizon will continue to grow. In addition to their strong position, Verizon stocks also have a 4.2% dividend yield, which explains why Mr. Wonderful has 4.16% of his fortune invested in the company. Merck & Co. Inc. is one of the largest pharmaceutical companies in the world, which manufactures prescription medicines, vaccines, biological therapies, and animal health products. Merck generates annual revenues of $49+ billion, and for the last 2020 quarter, revenue increased by 1.2% to $12.6 billion, topping estimates by $340 million. Merck's key competitive advantage is that it is seeing strong growth rates in key product areas such as Keytruda, which treats cancers such as melanoma that cannot be removed by surgery, and non-small cell lung cancer. In addition to that, Merck also has 2 COVID-19 vaccine trials in place, as well as a novel antiviral candidate, so the company will likely perform even better in 2021, with experts expecting 5% annual earnings per share growth during the next 5 years. But the reason why the company makes up 4.19% of Kevin O'Leary's portfolio is the fact that Merck also pays dividends, of course, which wields 3.2%. Procter & Gamble make up 4.35% of Mr. Wonderful's portfolio because the company is a very reliable dividend stock. It currently has a dividend yield of 2.3%, and the company has increased its dividend for the past 64 years in a row, which means Procter & Gamble is one of only 30 dividend kings, a list of stocks with 50+ years of rising dividends. The company achieved this by becoming a global consumer staple giant, selling its products in more than 180 countries around the globe with annual sales of more than $65 billion. The company is behind popular brands such as Gillette, Tide, Shimane, Crest, Pampers, Febreze, Head & Shoulders, Bounty, Oral-B, and many, many more. Since all of these products are in high demand regardless of the state of the economy, Procter & Gamble is fairly recession-proof. In 2020, the company even saw a rise in organic sales, thanks in large part to the strong performance in the fabric and home care unit due to the COVID-19 related demand for hygiene products and inventory increases. Johnson & Johnson make up the third largest position in Kevin O'Leary's portfolio with 4.71%. The healthcare giant has a market cap of nearly $400 billion thanks to the very large businesses across healthcare, including pharmaceuticals, medical devices, and consumer health products. Johnson & Johnson has annual sales in excess of $81 billion, and its biggest competitive advantage is the sheer size and scale of its business. Johnson & Johnson is a worldwide leader in a number of healthcare categories, with 26 individual products or platforms, and as a result, it is also one of the most recession-resistant businesses out there. This means that Johnson & Johnson has a steady profit even during recessions, which allows the company to continue increasing its dividends each year, and it currently yields 2.7%. Founded in 1978, Home Depot Inc. has since grown into the leading home improvement retailer with almost 2,300 stores in the US, Canada, and Mexico. The company already generates annual revenue of approximately $110 billion, but the demand for home improvement products is also growing at a high rate in the US. In addition to that, the industry is highly concentrated, with just two major operators, Home Depot and Lowe's, taking the vast majority of the market share. The company is also proven to be recession resistant, including during the ongoing pandemic, which has arguably even helped Home Depot as consumers have been spending much more time at home. Home Depot has generated strong earnings growth in the past decade, and e-commerce has added to that growth, with the company saying that sales for its digital platforms increased approximately 100% during the last quarter of 2020. Thanks to the combination of earnings per share growth, valuation changes, and the 2.3% dividend yield, investors can probably expect returns of roughly 9% per year through 2025, so it's not surprising that this company makes up 4.87% of Mr. Wonderful's portfolio. The largest position on Kevin O'Leary's portfolio makes up around 5% of its entirety and is filled by none other than Bill Gates' Microsoft Corporation. Founded in 1975, the multinational technology company manufactures and sells both software and hardware to businesses and consumers, with products including operating systems, business softwares, software development tools, video games and gaming hardware, and cloud services. Microsoft has a renowned brand and a global presence, of course, which means the company has some significant competitive advantage. The company has also proven to be relatively resilient against recessions, and even though at 1.1% it has a fairly small dividend yield compared to some of the other stocks on this list, the fact that Microsoft is such a well-established company makes it a pretty safe investment. That's it for this video debunking the top 10 positions on Kevin O'Leary's portfolio. Let us know down below what you'd like to see next, and leave us a like if you liked the video, and subscribe to keep up to date with our latest content. But that's it for today, and we'll see you in the next one.